Welcome to AHA Math and Science. In today's video, we'll be analyzing the direction of the major indexes, specifically SP 500 and the Russell 2000. And the market topped in January 2022, and now we have been in this bear market for about 15 months also. And then we have been stuck in this trending range for now almost 9 months also. So everybody's probably kind of wondering, which direction the market will go next. So this is certainly kind of like a big question, and it will be really kind of interesting to know, get some clues, what happen next. So actually, there's a lot we can learn from some of the previous bear markets, including 2008, and then another one in 2020, and then even the corrections, one in 2011, another one in 2015, and one in 2018. This one is like close to a bear market, but it's still a correction. We can still learn something from these corrections. So for the current bear market, we have this initial leg of drop, and then we have been in this trending range for 9 months also. So actually, this pattern is not kind of like strange. It's a very familiar pattern. It happened several times in the previous bear markets, including in 2008, initial leg of drop, and then a trending range, kind of like acting like a consolidation, and then you have a second leg of drop. And something like this happened even for this correction. This is like close to a bear market, but it's a correction. Initial leg of drop, and then you can see the trading range, a consolidation box here, and then you have another leg of drop. And same thing happened even in the 2020 bear market. This is a very rapid bear market, and the consolidation is very short. It only lasted for like a few days. So that same pattern actually appeared over and over again. And for even the correction in 2015, you kind of see this, even though that the consolidation may not be clear. But if you look at another index, specifically the Russell 2000, and this pattern become even more evident. Let's take a look. So this is the Russell 2000. So this is the index basically made of 2000 small cap stocks. So you can see that for the current market, it had this initial leg of drop. Then we've been in this trending range for now like almost a year. And the same thing happened for the 2008 bear market, initial leg of drop, a very long sort of trading range, right? Lasted like almost like also like a year, like the present time. And then in 2018, you can see that this is actually a bear market. It's not a correction. You have this initial leg of drop and a consolidation, and then you have another leg of drop. And then the same thing happened for the 2015 bear market. You have an initial leg of drop, and then a long consolidation trading range, and then you have a second leg of drop. So this is actually also a bear market, although that for SP 500 it's only a small correction. So these both bear markets for the Russell 2000, which only are corrections for the SP 500, is actually associated with a hiking cycle. So the Federal Reserve talking about hiking rates, at the end of 2015, and then the sort of the small stocks kind of reacted to that. So this is at the onset of this hiking cycle. Then towards the end of 2018, the rates are already kind of too high for some of the small businesses. So they're kind of under pressure. And then the last 2000 also entered the bear market, while the SP 500 had a correction that is close to a bear market. So these are really kind of interesting to note. So for when the interest rates are rising, the Russell 2000 is very sensitive. So more interesting is actually look at the internal dynamics of these two indices, the Russell 2000 in this kind of orange, a brown color, and then the SP 500 in this blue color. So for each of the bear markets or the big corrections, you can see that there's some kind of divergence going on between these two indices, and divergence going on between the two indices, and then also in 2018. And then the current market is probably, some of you guys maybe already noticed, it seems like the tech heavy SP 500 is kind of strong, but the Russell is kind of weak. And we're going to actually talk about that in detail in this video and analyze what this divergence mean. So we're going to look at each of these bear markets or big corrections, and then find some common feature, and then maybe get some information or give us some insight about what would the present market will go next. So let's start with 2008. So this is other two indices. They are kind of like already scaled so that the index start at 1 on January 2008. And the last, the SP 500, you can see made a low on July 15, 2008. It closed at 1214.91. And then about 2 months later, in September 2008, the SP 500 broke down below this level, somewhere here. And at the same time, you can see that the Russell 2000 was well above the July low. So here you can see that SP 500 is weaker, and then the Russell 2000 is a strong index. Well, that's because at that time, the financial crisis was triggered by the subprime mortgage crisis. So a lot of the financial companies and banks are kind of like had a huge losses, and that dragged down the SP 500. So it's a weak index. But the interesting thing here notice is like even at that time, the Russell 2000 seems to be a strong index. Even after dipping below a bit, even made a new high, actually close to the previous high. But then, at some time later, however, both index broke down and then made a new lows, much lower than before. And then the bear market ended. So this is kind of the feature we identified for this bear market. Now move to 2015, where the Russell is a bear market, the SP 500 only had a correction. So this is kind of happened at the onset of a hiking cycle. So the Russell 2000 is a weak index. It made a low on September 29, 2015, closed at 1083.91. And then just in January of 2016, you can see the Russell 2000 broke down that level. And at the same time, this blue curve, which is SP 500, is still well above the October low. This level is still well above the October low. So the SP 500 is a strong index. But nevertheless, sometime later, both indices made a new lows. And then the bear market kind of ended it here. So we see this same again, which is weak index broke down first, and then the strong index follows suit sometime later. And now let's move to the 2018 bear market for the Russell 2000. And for the SP 500, it's not exactly a bear market, but it's very close. You can see the Russell 2000 made a low on October 24, 2018, closed at 1468.70. And then in December 2018, the Russell 2000 broke down below this level. And at the same time, the SP 500 is actually very interesting. It's slightly above the previous low here. So if you draw the line, it's just slightly above. And then the SP 500 even rebounded a little bit. But then, nevertheless, both indices actually made a new lows. And then the bear market kind of ended here. So again, we see the same again, which is the same pattern. A weak index, which Russell 2000 was a weak index at the time. This is at the kind of the peak of the previous hiking cycle. You can see it broke down first, and then kind of like there's not a lot of delay here, just kind of shortly after the strong index SP 500 also kind of broke down again. So we see the same pattern over and over again. So what about the present time? Well, due to the rising interest rates, the Russell 2000 has been kind of weak. And a lot of small cap stocks are under pressure because the business, small businesses usually are very sensitive to interest rates, and especially because the banking crisis, the recent banking crisis, the funding has become also tight. So there's some kind of like credit crunch going on, for, definitely, it's a pressure for the small cap stocks. So the Russell 2000 actually made a low on June 16, it closed at 1649.84. And then it had actually two higher lows, one in October, another one in December of 2022. So December 2022 was on December 28. It closed at 17,2022.02. And so some people argue that the fact that the Russell 2000 made two high lows is a good thing. It may mean like the bear market is over and then now everything is go high from here. We actually argue for the opposite, especially the signal that appeared just 2 days ago on March 23rd. Actually, the Russell 2000 just closed below the December 2022 low. Just 2 days ago on March 23rd, it closed below the December 28th low. That's not a good thing. And that is really kind of a warning sign, but it tells that the weak index, which is the Russell 2000, is already kind of broke down from the previous low. And at that time, you can see like just 2 days ago, the SP 500, which is at this level, which is well above the December low. So the SP 500 is a strong index. It's still showing a lot of strength. But the fact that the Russell 2000 already kind of broke down is a warning sign. And based on the pattern we have seen before, usually it means that at some point, the strong index will also follow suit. On the level that we're watching very carefully for the next weeks, days, is actually whether the Russell 2000 will break down this June low, which is at 1649.84. So they said that the daily close. So if Russell close below this, then it could be really mean a real danger ahead, not just for the Russell 2000, but also for the SP 500, because we have seen this pattern over and over again in previous bear markets. If the weak index broke down first, usually the strong index kind of followed the suit. That happened in the previous, a few bear markets. So what does that mean? If indeed the Russell 2000 kind of broke down, kind of breaks down this outside of this trailing range in the downward direction, and that usually means another good thing, because you can see in 2008, the index just had a very sharp, quick, and sudden ugly drop, and usually with a magnitude bigger than the first leg of drop. It happened again in 2015. That's a bear market for the Russell 2000. A second leg of drop, once it break down from this trading box, it just had a very precipitous drop, very sharp, and magnitude bigger than the first leg. Same thing happened again in 2018. That's also a bear market for the Russell 2000. So, and for the present case, if indeed close below the June 2022 level, then we should really watch carefully. And based on the pattern we've seen before, it could mean a big drop for the Russell 2000. And that's usually also a bad thing for the other major indexes, such as the SP 500, because usually, based on the pattern, we have seen that a weak index breaks down first, and then usually the strong index kind of follows suit. That happened over and over again. And this pattern seems to be very reliable. So I hope you have enjoyed this video and found the information presented in this video interesting. Please do not forget to click the like button and also subscribe to our channel. And really your support and means a lot to this channel, so that we can make more videos like this one. And thank you for watching this video.